திரு ஆனந்த் ஸ்ரீனிவாசன் அவர்களின் சாதாரண பங்கு அசாதாரண லாபம் தமிழ் வடிவம் இப்போது கிண்டிலில் கிடைக்கிறது. இந்த புத்தகம் புதிய முதலீட்டாளர்களுக்கு பங்குச்சந்தை பற்றிய ஒரு அறிமுகமாக இருக்கும். இந்த புத்தகத்தை நீங்கள் கிண்டிலில் வாங்க விரும்பினால் வீடியோவின் கீழே இருக்கும் லிங்கை கிளிக் செய்யுங்கள்.
Good evening. Today I want to bring you something interesting. India's so-called largest digital finance company, Paytm, is going public. On Friday, the board of Paytm met and approved an IPO. The latest results are not known to us, but in the previous year, on a revenue of 3,600 crores, losses were well in excess of 2,000 crores. So, the company nearly lost more than 60% of its revenue as losses. It cannot be expected that venture capitalists and private equity funds forever will keep funding it. Like Uber, a loss-making company that went public, Paytm is also going public. In the grey market, shares of Paytm are trading from 12,500 have shot up to 22,500. The news is that they want this company should be valued at 1.5 times to 2 times its last valuation, which was $6 billion. It is expected that the total money raised will be more than 16,000 crores, which is bigger than the Coal India IPO, which is the biggest IPO. The biggest competitors for Paytm are PhonePe and Google. While Google has reported very negligible revenue of 4 crores, PhonePe is given a revenue which is 10% of Paytm's at 320 crores. Paytm has a first mover advantage and has been there for a long time. It benefited greatly from demonetization, but sadly, it has not become profitable. It started as a digital wallet where people would park money and spend it when they wanted. But the NPCI companies, BMAP, put paid to it because you need not store your money in digital wallets. UPI's Beam was available to all companies. PhonePe and also Google Pay made excellent use of it and have captured huge portions of the market, and nobody is parking money in Paytm and transferring it. Paytm applied for a banking license and got it. And because they've got a banking license, they have a Paytm bank license. Basically, money parked in Paytm digital wallets on Paytm Bank can be invested in government securities. Paytm Bank cannot be lended. There is a mistaken notion of comparing Paytm with Ant Financial. But Ant Financial's biggest profits are coming from Alipay and also the amount of digital credit they are giving and the loans they are giving. Paytm is yet to become a major digital lender. Paytm is talking of using 15 to 16 verticals to make money. Some of them are using it to buy mutual funds at low cost and trying to start a brokerage along with lending. But these are fanciful dreams of the future, and nothing has materialized so far. There are talks that in 18 months, Paytm will break even. I do not think that is possible because from 60% of revenue as losses to swing to break even or profit in 18 months is a very difficult task, especially with competition. In terms of offering financial services, Zerodha has already captured the low-paying market. There are other companies such as Upstocks and RSKV which have entered the low broking space. There is also talk that Bajaj Finserv will enter the market. On the credit side of the market, Bajaj Finserv and IDFC are lending to the bottom of the pyramid customers. There is no yet blue ocean, a blue ocean being a place where there is no competition for Paytm to exploit. Mutual funds basically are fees driven where expense ratios are high. By giving you funds at very low expense ratios, it is not possible for Paytm to make money. I do not know from where Paytm expects to make money. Even it is in financial services, Zerodha has demonstrated that it is possible to make huge amounts of profits by bootstrapping, whereas Paytm has taken the cash burn route and there is a phenomenal brand recall. But whether that brand recall can be converted into profits is something to see. Among the parents of Paytm are Ant, and through Ant, owning Ant, Berkshire Hathaway owns a slice of Paytm. But Ant has moved to digital credit and merchandise credit in China, whereas Paytm has not moved to these kind of credit services. To say that they will move into those lines and become profitable in 18 months is very difficult to guess. But they are using, like Zomato, this window of opportunity of excess liquidity provided by the Federal Reserve and FIIs and Indians chasing stocks for returns in a low interest regime to list. The IPO may list at a huge profit to what is now being traded in the grey market, and the price may be higher than the IPO price. But with such a large issue, the chances of a big swing in IPO prices is difficult. In the long run, if Paytm does not become profitable, I don't see a long term future for this stock. Thank you for watching. Be rich.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.